Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Monday, May 5th. Firstly to the S&P 500, and here we have a change of trend to the downside today. Price action rejected from above the 1883 level. The market seemed to be attempting to build a test up to the major high at 1897, but for the last 2 days prior to today we had a doji type candle and an indecisive candle while testing around the 1883 level of previous resistance, and today rejected from there. But the important thing here is the long shadow on this candle and a white body candle with the buyers closing with control, and this suggests that the sellers have lost commitment down around the 1867 level, and that the Tenkan Sen is holding as support once again for this market, and suggesting that the bias in that short-term time frame is firmly up, and we may see the bias strong enough to test up to that 1897 major high. Looking at the Chica span, that's above the corresponding price action, so it's confirming the bullishness that we're seeing in all three timeframes, and suggesting that if we can see a bullish breakout up above 1883 and strong early bullish activity up above there and the high at 1891, we could see the market testing to 1897 or even establishing new major highs. Next to gold, and here we've seen the market rattling, creating a new first time frame uptrend. The previous day's trading was an outside day in bar chart terms, a day where the buyers had taken back control after the market sold off and was testing down below the Tenkan Sen. Now we've had an important breakout up above the 1300 round number level of resistance and above the Kijun Sen indicator. The problem here for the buyers, however, is that they have been rejected from the bottom of the Ichimoku cloud, and the Ichimoku cloud is a very strong area of resistance. Now, over the next week or so, and probably about a week and a half, the area of the cloud resistance will become very much thinner, and until probably the end of May, there will be an opportunity for this market to turn into a bullish market in that longer term time frame. So if the area around 1300 can hold over the next week or so, and if the buyers can build some solid momentum, we may see a change in sentiment in this market. So some positive or potentially positive price action coming up. Importantly, looking at the Chica span, that has now shifted above the corresponding price action where it was previously below, and let's just take a look, below for some time, and it does suggest that momentum has shifted back to the buyers, so we may see a potential test above that cloud. Now, with the rejection from the cloud at the moment, it may not be some time until we see that, so we may need to be patient and wait for the breakout to occur. But certainly we do have a bullish market in the medium and fast term time frames. Moving to light sweet crude oil, and for the previous day's trading we saw a change of trend on a bullish candle. It was a candle where the buyers had taken control. The market was rejected from the 100 level, closed just around that level for that day's trading, and rejected from the top of the cloud. For today's trading, here we see a spinning top type candle. It's an outside day in bar chart terms. It does raise doubt about whether that first time frame uptrend can continue, but also it's a potential harami bearish reversal pattern, and we will be looking for the market to make a lower high and a lower low to confirm that bearish reversal. Importantly, price action tested above the 100 level for the second consecutive trading day, and to the top of the cloud, and also to the Tenkan Sen, and we saw the buyers rejected from there, with the sellers attempting to take control. They have taken control back from the buyers, a moderate form of control, so there is potential for this trend to change to the downside. Now the problem here is that any change of trend to the downside may be limited by the support at the bottom of the cloud around the 98.79 level. We do have a bearish market in the in the medium term and the fast term time frames, and those areas should continue to offer themselves as strong resistance, and significantly at the moment around this 100.50 level, just above the round number 100. The Chica span has shifted to below the corresponding price action, suggesting negativity in this market in terms of momentum and potential for a bearish breakout down below. If we do see the sellers come in and close the market down below the cloud, then we should be looking to the 98 level to hold as support. Next, moving to wheat, and here we still have a bullish market in all three time frames, trading above the cloud and the Kijun Sen and the Tenkan Sen. The market has changed trend to the upside, but a candle which has importantly closed up above that 722 level of resistance, but has been rejected from the 740 level of resistance as expected. So we may not see some follow through. 740 will be very important for this market. Now there is potential for 722 to act as strong support for this market, but looking at the Chico span, that is above the corresponding price action, so it's suggesting that we have some decent momentum to the upside in this market, and suggesting that even though the sellers have taken control for this current candle as it's finished, then we should see the market find support at one of these levels and the buyers potentially come back into this market. So we will be looking for continued upside if the market does come off. So 740 at the moment will be important, as will the 722 level. Moving to the US 30-year bonds, and here we've seen a market that was rallying over the last couple of days. The buyers had built some solid momentum to close in a bullish manner up above the 135.03 level, and for the previous day's trading close in a fairly bullish manner up above the 136 level. There was good potential for the market to go on with a move and trade up to 136.31, but we have seen the buyers lose control for today's candle with a black body candle closing down towards the low and suggesting that we most likely will see the market trading to lower levels. Now this is a potential Japanese candlestick reversal patterns, two type. The first is a tweezers top, and that's where we have the highs around the same level. Normally a fairly strong reversal pattern, so we will be looking for a lower high and a lower low. And it also is a bearish harami pattern, so we will be looking for confirmation of that. And I suggest that if the market does come off, which looks highly likely, that we should see very, very strong support now down at 135, a previous resistance level in the past, and the area that the Tenkan-sen is trading at, where we've had some decent solid upside momentum in this market. It should be a strong area of support. Now this market remains bullish in all three time frames, and the Chico span is above the corresponding price action and confirming the bullishness that we're seeing in all the three time frames. And the likely scenario here is that if we do have that change of trend confirmed, we should see the support come in down around 135, and then the buyers come back into the market to trade the market to the upside in line with each of the Ichimoku indicators in their respective time frames. Now moving to the S&P 500 futures on the hourly charts, and for the opening of the trading session we saw the market attempting to rally through the Ichimoku cloud and through the middle pivot point level. We saw the sellers come in and take control with a bearish breakout below the cloud, attempted rally to the bottom of the cloud and then selling off, finding support just below the second pivot point support level, rallying to in the middle pivot point level, and then rallying to the top of the cloud and being rejected from there. At the moment, as trading has commenced, we are trading down below the cloud once again, finding support at the Tenkan-sen, and that will be crucial in the first couple of hours. Very good possibility of a breakout up above the Ichimoku cloud. We do have a very thin part of the cloud at the moment, and this market is bullish in the medium and fast term timeframes. Now if price action is rejected from the cloud, and we do have to react to the market as it behaves around the cloud, or with a breakout above the cloud or below the cloud. So what we want to see is a bullish breakout above the cloud. If we see that and we see confirmation of that with some decent follow through, then our target here is the first pivot point resistance level at 1885. If we see bearish activity down below the Tenkan-sen, then our first target here is the middle pivot point level at 1873, and then potentially down to the Kijun-sen at 1870, and then the first pivot point support level at 1865. The Chico span just over here, it's a bit hard to see, but it is just above the corresponding price action, so suggesting some upside momentum in this market at the moment, and hinting that there is a possibility of the breakout being to the upside. Now coinciding with that flat part of the thin part of the cloud, then if we do see that bullish activity above there, then the likelihood of a trade up to about the 1885 level is probably quite good. But we can't preempt the market. We have to react to the market as it trades around these indicators and around the areas of support and resistance.